Good evening. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Wednesday, the 29th of March, 2023. And we're sitting here now. Let's get the exact time as I do this. My watch turned on me, 5:37 p.m. Central Time. So part of what the market is facing now is interest rates are climbing again. You're even seeing it tonight as the market's gaining some yield back. And as that's going on, it puts a bit of pressure on the gold market. It's got to compete with the yields doing that. Remember, gold had the safe haven play. It got up to the 2,000 level. It's thrown itself back down. Now it's got to fight for what it's going to do. The dollar is picking up a little bit of support against the 102 level. We'll see what that does. And again, the dollar picking that up in part because we're seeing interest rates climb a little bit. Now, the past 2 days have been full of FDIC talk, and it appears that what they're going to have to do is raise $23 billion to put money back into the fund. I think there's $128 billion in the FDIC fund. And what happens there is, how do they get it? You know, it's going to be a political football. You can count on that because the Congress is not going to want to see the smaller and regional banks take a hit. They're going to go after the big boys. Why not? They've been doing share buybacks, declaring bigger dividends. You know the game plan. And they'll say, you've made a fortune on this. You can afford to pay a bigger share. That doesn't mean that there won't be something paid by the other banks. But the FDIC, under the Dodd-Frank bill, has tremendous latitude under who it charges, how much they charge these different people. They've got to be able to do that, and they have it. So be ready for that, but they're not going to probably announce that formula, from all that I heard, until May. The next thing is, you know, when Fed Chair Powell was questioned just recently about interest rates, his answer was interesting. He said, if you look at the dot plots, it gives you an idea of where we're going. So there is the consensus built for one more rate hike. That's the consensus at the May meeting. And then after that, you guess that we're going to go flat. Now, remember, you get every quarter another set of dot plots. So we'll wait and see what the one after the one we just got is going to tell us. That'll be a bigger story. But I write about this tonight, telling people, okay, let's assume you get one more. That's why the stock market's rallying. It's smelling that at the minimum, this is what it believes, the Fed is one and done. I'm not saying that is the case at all. If labor numbers continue to come out one way, and that is strong, and we're going to get unemployment again this week, the claims at least. If those numbers don't fall and don't build and the labor market stays strong, I contend that the Fed has a real problem, because as people keep working, they have money to create and keep inflation going. Now, I'm also watching what food inflation is doing. And while it came down hard, it seems to have been stabilizing recently, things that I'm watching for sure. And now I want to see what's going to happen in the energy complex and where that all wants to go, because you're sitting here over near $73 in WTI crude and 78 or so in the Brent. When we take a look at the gold market, we're down for the week nearly a percentage point, as of right now, 0.95%. You can see how the market's now forming a triangle. You can visually just see it, clear as can be. The pattern is one of higher lows, and as I pointed out in yesterday's video, lower highs. That is not a trend. The next thing that happens, if we look at the gold here, it is still over the key moving average of the 18-day average of closes. The Bollinger Band, as you can see, the resistance is right up there. We're far from it, and we're overbought. When you're overbought, you correct that and alleviate the problem of the overbought by either embedding. It's not acting like it wants to do that with both the red and the blue going over 80, or it drops. If it drops, that means lower prices coming in the gold market. That's how I'm viewing it. When I look at the gold-silver ratio, I looked at that and I told my clients that they should buy silver basis that, and it's worked out pretty good because silver has stayed a lot stronger than the gold recently. It still has the bullish embedded reading. Whether the market can actually pick itself up to the upper Bollinger Band or a window envelope, don't know. If the headwind comes from a stronger dollar, it's doubtful, but it doesn't mean until this number gets under 79 that it has to break. It can hang here until the next whatever is going to happen. In the copper market, like the gold, we have higher lows but lower highs. We also had an outside day to the upside today, and now the market's sitting here. If it takes out today's lows after an outside day up, if you've taken my course, the odds favor price is going to go back to 401.35, which to me makes sense given how overbought the market is. So I'm looking for that type of play. I think the pros are trying to probe the short side of the platinum market as you have lower highs, lower lows. It'd be right here. The price stops right over this number here, that high, looking to come back into right through here, the 200-day average, which is 950, 490 down to the lower Bollinger Band. Momentum down, price down, trend down. And when we look at the palladium market, it's the flip-flop. It flipped bullish today. So you got higher lows, higher highs, pretty much a sideways market like the platinum, until you take out now here the 1386.50 level. The bulls grabbed control. Can they drive it to the upper Bollinger Band? I'm not inclined to think it's going anywhere because it has just hung at this 18-day average, day in and day out. And if you try to make something out of nothing, guess what you end up with? A loss. That's how I view it. So I walk away from that type of trade. Let somebody else want to be the hero. In the dollar index, one day doesn't prove anything. The trend has been down, but again, you're terribly oversold. You're not embedded, not even yet close to it. I was looking at this. You're not there at this point in time. I can't make that move yet. Both numbers have not been under the 20 together recently. You either correct by embedding, which means a drop in this, both numbers get under 20 and stay there for a bit. As you know, if you've taken my if you've taken my enhanced Bollinger Band course, I just take that back, that's there. Or if it starts moving to the upside, the correct prices are going to get a bouncer, and that'd be a little bearish for the commodity markets as a whole. So we're at a very, very interesting inflection point in the market, and one that I think you've got to use a lot of caution with and sit back and say, okay, now that the bank hearings are over, everything's done, where do I want to go with that all? And it's probably a good time you take advantage of everything we have to do in our kit. Now, in our kit, you get the charting software, access to it. We have two versions, by the way, a web-based version and the download version, and I think you'll find it's quite a bit. There's chapters here that explain all that we have. Tools for beginners and the more advanced trader. My popular trading patterns, and I lay them out. You can print them out so you put them right on your desk. Here's something you want, cause and effect. I created this under the Volcker time, and it was about M1, M2, and M3. My Pivot Point course, my Arun course is in here too. They're both totally free to you. That's the Arun indicator. Here's those chart patterns, and if I were you, I would definitely print them out and put them on your desk. Then we link you to all the Chicago Mercantile Exchange courses, and they're forever adding new courses, doing them. They're free for you to take, and we list them out for you, and you get to go right in there and take a look at all that. So you put this all together. We think it's a heck of a package because it's got a bit of everything for you. Just go to our website under free offers or click up here, give it a click, and away you go. I'm Epstein. I will talk to you first thing in the morning. You have a great day.